Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpar Research and Analysis, and this is daily analytical report. So, video, seminar, webinar, where in half an hour I will tell you what's going on the market from the fundamental point of view and from the technical point of view. Obviously, as I'm a technical trader and I trade myself, I will show you trading occasions from the technical point of view. I will discuss fundamentals because they are important, but we always focus on the technical side of the market to look for the best trading setups possible. Okay, so let's start. As always, we start with the macro calendar because you need to know about the data during the day, what's going to happen. Because it can strongly influence trading setup. So, for example, you see a great occasion on the market, a great technical occasion on the market, but later in the evening, in the next 2 hours, for example, you have an interest rate decision for the currency pair that you want to trade on. So, actually, it's not the best idea to trade 2 hours before the interest rate decision. Obviously, if you're trying to avoid risk, there are some traders that are looking for risk, they are seeking risk, so for them, fair enough, you can trade when you want. But us as Alpari, we try to teach our traders to limit risk, to respect the money. We try to teach them the best money management rules, risk control rules possible. Okay? So let's start with the macro calendar right now. I would like to start with oil. Why with oil? Because oil is the top story for today and for yesterday as well. Yesterday we had over 2% drop on oil. We even had the data, API weekly crude oil stock, which declined, but it didn't help much. I think that just selling pressure is so big that even slightly better data won't help here. We have a continuation of that because today we have EIA crude oil stocks change. As you can see, the forecast is a decline. We will see this number in 2.5 hours. About the bearish situation on oil, we are writing for a long time. The last time I did that was at the end of May, at the beginning of June, where I wrote an article to FX Street, I guess, with a strong sell signal there, and that's actually what happened. The price declined sharply. As for the calendar, you can see that today we had monetary policy meetings and minutes from those meetings. We had a speech also from Mr. Kuroda from Bank of Japan, but it wasn't so influential on the markets. What was influential and what is not in the calendar here was a speech from a chief economist from Bank of England. Right? We had a nice movement on British pound because this chief economist, Andy Haldane, he surprised the market with kind of hawkish comments in his speech in Yorkshire. He said that he was leaning towards joining the hawks on the monetary policy committee and considered a vote for a rate increase as early as June. He also said that he favors withdrawing some of the August 2016 stimulus in the second half, and that the partial withdrawal of additional stimulus put in place last year would be prudent relatively soon, provided the data come in broadly as expected in the period ahead. Okay, that's what influenced the markets. That's what influenced the British pound and the pairs with British pound. Actually, I recorded a trading sniper video before this webinar showing a good buying opportunity on cable. It's strictly connected to this reaction on those words from chief economists. So we had a bit of a roller coaster on cable on British pound because a week ago we had a hawkish vote in monetary policy committee in Bank of England, 5-3, which was good for pound. Then we had a dovish speech from Mark Carney yesterday. He said, and Mark Carney is Bank of England governor, and he said that rate hike, he suggested that rate hike shouldn't happen in the next few months. And today, another shift towards the hawkish view from the chief economist of Bank of England. So that's important news for British pound today. What you should focus on is data for the oil market, but also overnight, we can say it's today. We have a rate decision from Reserve Bank of New Zealand. So if you want to trade on New Zealand dollar, be aware of the fact that we do have this decision. We do not expect any changes. Interest rate is on all-time lows, but many traders are waiting for a statement if it will be dovish or hawkish, especially that New Zealand dollar recently is quite strong. So that definitely, if you're looking for volatility on the market, you should look towards the New Zealand dollar. We should have some attractions there overnight. Apart from that, I think it's the market is really calm. I'm observing Polish index WIG 20 of the biggest 20 companies in the country, and it didn't move much for the whole day. It moved like 7 points. It usually moves, I don't know, 40, 50 points, 60, and today it's 7. That's really low volatility. Most of the markets have low volatility as well. So the day is rather calm, and only attractions that we have were on British pound. So now let's see the technical side of the market. We can start with okay, let's start with oil. Oil is testing is on the levels from the mid of November from last year. We have a bit of bullish reaction here, but that can be just a dead cat bounce, as was present here at the beginning of June, in the middle of the June, and is present now. So as you can see, we do not have a strong correction here. All those bounces can be called just a dead cat bounce, which are characteristic for strong downswings without any hope for a reversal. So it looks like a last chance for buyers. If this level will be broken, we should see a further decline. It does not look good at all, but we are saying that that analysis that I wrote for FX Street was written here in this place. We said that there should be that there is a strong sell signal here, and look what happened. That was a good one. So oil is bearish. Now, before DAX, let me show you S&P 500, where yesterday we got a false breakout here. We made new tops, but they couldn't hold this, the latest support as a support, and this attack on new all-time highs is a false breakout. It's a success, right? Because we have new all-time highs, but at the same time, from the technical point of view, it is kind of a false breakout, and now buyers are suffering from that. But I can see 4 major supports here, and only one of them was broken. So it's still not enough to claim a bearish trend or a bearish situation. There's this first support which was broken. There's another one which is a midterm uptrend line, this blue one. There's another one which is a horizontal support here on the 2420 points, and there's another one which is a long-term uptrend line, this red one. Even on a daily chart we can see it. So as long as we stay above the red line, oh, and there's another one here on 2400 points, as long as we stay above those levels, I think that that bullish trend is not in danger. We cannot say that it's in danger after one day of a downswing. It's a daily chart, and we can see just one day of downswing. So it wouldn't be wise if after this we would claim that the downswing starts, especially that this is an inside bar. It's not an outside bar or an engulfing, which are much stronger formations than the inside bar. It's just an inside bar, and we broke just one support. We still have 1, 2, 3, 4 left. Only here, when this gray line will be broken, we can think about bearish sentiment here. We can think about start of a new correction. Now, no. Now it's too early. DAX also was unable to hold this support, but on DAX it wasn't really a support. What DAX is making is just a channel up formation. As long as we are in this formation, as long as we are above the lower line of the channel up formation, everything is great, everything is awesome, and there is an uptrend. Obviously, I'm kind of joking, because in my strategy I never open long positions on near all-time highs. I prefer to wait for corrections, but in terms of indexes, if I would wait for I'm not trading indexes at the moment, but if I would wait for the correction, I wouldn't trade at all, because what we do have on indexes is just pushing forward and up. So there's not really a place here for a correction. So on indexes, even despite the fact that we had a drop yesterday, everything looks good from the technical point of view. So now, Forex market. Now, Forex market. Let's start with cable. This is cable. We can see this positive reaction here. This is a daily chart. And the cable defended horizontal support here on 1.265, and also in the same time it defended the lower line of the wedge formation. It is positive wedge as a trend continuation pattern. A trend here is bullish, so we should see a bullish reaction here, upswing, breakout of the upper line of the wedge, and a continuation. That's a base scenario in the long term, but around British pound we have a lot of politics right now. We all know that on Monday negotiations with European Union started. Also, a Conservative Party lost the majority in the parliament. They still don't have a deal with other party to rule. So it's getting difficult for British pound, but from the technical point of view, if the daily candle will close here, it's gonna be fine. American dollar to Canadian dollar. I like this situation. Why is that? Because it's technical. So what we do have here was a strong downswing in the first half of 2016, and then 1 year recovery, right? So a downswing was lasted for a few months, 5 months, and then 1 year recovery, and we didn't even retrace fully 61.8% of this downswing. What we are having now is an attack on the lower line of this flag, of this channel up formation, and yesterday the price created a pennant, and pennant usually is a trend continuation pattern. Trend is negative, and also apart from being the trend continuation pattern, if we do have a sideways trend, and pennant is a sideways trend, and it's present above the horizontal, not horizontal, but in general above the support, it's a negative sign. So there is still selling pressure here. It's not over yet, especially that, look, I deleted that line, I can draw next one and it still will be a pennant, so it's not denied, but I won't do it obviously. So what we're having here is the pressure on this support, and as long as we stay below 38.2 Fibonacci level, the sentiment is more negative than positive. Why I mentioned 38.2 Fibonacci level is the fact that this price, American dollar to Canadian dollar, respects Fibonacci a lot. Look at that. Upswing stopped here on 50. Support on 23.6. In the meantime, we had the reaction on 38.2, 38.2, 38.2, 38.2, 61.8. So recently, since the November of 2016, the price, I think it's earlier, since September 2016, the price is greatly respecting the Fibos. So as long as we stay below 38.2 Fibonacci level, I think that the sentiment here is negative and we still have chances for a breakout. How to trade this breakout? I would say that breaking the green line here should be it. Once the price will get to this arrow, I'm sorry, that will be a signal to open short position. Nice opportunity here on American dollar to Mexican peso. Look at that, long-term uptrend. Finally, the uptrend line is broken. Then this uptrend line, which was a support, is proven as a resistance here. And then we have another horizontal support here, even created by those lows before Trump was elected as a president. Important lows. And those lows were broken, that support was broken, and now it's the first test as a resistance. And as you can see, this test is positive for sellers. We can see supply here. Demand retraced, and the daily candlestick looks like a shooting star. This is significant, this is strong. And I'm gonna think about that if I should open a sell position here on my live trading account, because it's according to price action, right? Price action tells you that broken supports becomes resistances. Price action tells you that when a shooting star emerges on a resistance in a downtrend, that's a sell signal. Simple as that. Next instrument, American euro to Japanese yen. Yesterday we had a small correction, but today we I'm sorry, but today we are recovering from that. And my scenario is still in the game. My scenario was touching this blue line, and then the long-term breakout and a continuation of this movement. Gold tried to defend this trend line, but look at that in a bit closer view. What's that? That's not the prettiest defense ever. Those two candlesticks with long heads show us that they try to pull the price higher, but they got a strong counter-attack and they had to abandon their view. And most probably we'll have a breakout here. We'll have a bearish breakout and a movement to the neckline. The neckline of this head and shoulder formation. Left shoulder, head and right shoulder, which can be potentially very, very dangerous for buyers. Euro to British pound, clearly we can see a reaction on those hawkish statements from the chief economist of Bank of England. I don't think, well, this support is still in the game. It was in the game for the last few days, as you can see on the hourly chart, but it will slowly start to lose the meaning here, because if the price is too often on it and crosses the support or a resistance, it finally loses the meaning. No clear signal on Euro to British pound. Silver also is going down. It does not look good for buyers on silver. American dollar to Polish zloty. We were on Monday. I wrote an analysis for Polish side here, claiming that we should go higher, at least to this line. We're going higher, so everything is under control. Why? Because we went above this horizontal resistance here, and we are in a flag, which is in general a trend continuation pattern. If we look in the short term, it's a channel down formation, yes, but still price moves from the lower line of the channel down formation to the upper line of the channel down formation. So here we still have 400 pips movement possible for 400 pips. So it's still a good occasion even for short-term traders. Euro to New Zealand dollar. As you can see, New Zealand dollar recently is very strong. The last 4 weeks, 1, 2, 3, 4, 5, even 5 weeks. So that is why it will be very interesting to see reaction for the statement. Because as you can see, traders on New Zealand dollar are very hawkish. If the statement will be dovish, we can see a big reaction here, a big reversal. From the technical point of view, I would say that sellers have more chances here. We have a kind of head and shoulder formation, left shoulder, head, and a right. Left shoulder, head, and the right shoulder. Neckline here. This horizontal support got broken. Overly a negative sentiment. American dollar to Japanese yen created a shooting star on a horizontal resistance, but today traders followed that at the very beginning, but now they are retracing this movement. But we are in the middle of the symmetric triangle formation. It's not the best place to be when you're a price action trader, because price action traders, what they do is they look to open a position here or here, not in the middle of the long-term formation. That's a place where when you trade you lose money most of the time. Here, Australian dollar to American dollar. We also don't have anything here because, as in the previous one, we are in the middle of recent swings. That's not the place to trade. Euro to American dollar. Your favorite. Yesterday we broke first important support, which was a trend line. We still had 3 left. Today, yesterday we broke another one, a lower line of the channel up formation, and that was kind of dangerous. They also aimed for the third one, the horizontal support here, but they couldn't force it. They tried, but they couldn't hold it. But today, I'm sorry, but today price is trying to get back to the channel up formation, and they are struggling. Currently, the price is creating a shooting star candlestick, which is not very optimistic. My base scenario for this instrument is a downswing. I would rather see a breakout of this horizontal support and a continuation of this movement. Okay, next instrument is Australian dollar to Japanese yen, which is creating a nice hammer on a daily chart on a horizontal support. We also broke from the wedge in an uptrend, wedge, breakout. That in overall, that creates a buy signal. So if they will hold with this hammer here, that opens a way for 250 pips upswing. And last 2 pairs, New Zealand dollar to Japanese yen. Here you can clearly see this power of New Zealand dollar recently. Over 2 months, we do have a nice upswing. But what I would like to show you is a horizontal resistance here, and what the price created yesterday and 2 days ago. Shooting star, another shooting star. After 2 shooting stars on a horizontal support resistance like that, I would think about opening short position, but that would be a mistake, as we can see now, because the price is not going down. Obviously it's not over, right? But it looks like there is a strong buying pressure here, that they don't really want to sell, even despite those 2 shooting stars in a row. In general, I think that 2 shooting stars in a row on the daily chart below a resistance, that is a legitimate strong sell signal. But as you can see, not this time. This time is different. Obviously, when you open short position here, you should have your stop loss order above the highest point of this upswing. So we would be on break even right now. But this reaction, no, I don't like it. I don't like it. The price should be much lower. So even if we would open this position right now, we would be on break-even point. But still, I have to admit that I wouldn't feel comfortable with having a short position here right now, seeing the price action that I'm seeing right now. So a buying pressure. British pound to Japanese yen. We had a nice buying spot here because of the horizontal support and this upper line, but it was ignored. The price went significantly lower, but what happened is it was false breakout, and now we have a movement. Now we have an upswing according to the price action seen here. We have it now, but obviously it's supported by fundamentals, and weakness of it's supported from the fundamentals from British pound, and also supported by the weakness of Japanese yen, which you can see, for example, here, or here, or here. So Japanese yen today is weak, British pound today is strong. Excuse me. So when we do have a combination of those two, you can see a movement like that. So yesterday that was a sell signal. Even today in the morning, that was a sell signal. But now the sell signal is denied, and we do have a legitimate buy signal on very, very volatile pair. Many investors like this pair very much. Okay guys, thanks very much for watching daily analytical report. I hope that you like some of those setups. I like them a lot, and I think that I will now open my account and try to do something with that. We will see. And see you tomorrow, obviously. Now we have a half an hour break, and after that we will have a webinar about trading fundamental analysis, about using fundamental analysis in trading. If you want our views on the market, you have to follow us on our Twitter account and our website alpar.news. Thanks very much and goodbye.